Friends, in this video for I Thought Wealth, I'm going to talk to you on the topic, the commodity uptrend. Is it accidental or is it structural? Many people are still shocked and stunned by the way the commodities have risen. To most people, it seems speculative. They feel that this will correct very fast, or supply will come, or some other event will come to spike what has been an unprecedented rise in commodities over the past few months. To many, it also is taking them back to the previous cycle. So those who missed it are very keen to look back at the previous cycle and draw lessons from how the bubble collapsed. The most important thing is that in the previous cycle, you had a global financial crisis, which happened when the commodity prices were at a high. So we are actually omitting the global financial crisis in our logical thinking and coming up only with how companies announced capex and how capacities became swollen and how demand and prices contracted. So somewhere we are trying to fit a conclusion with logic. So I don't know whether that will work out. But the other side of the question, is it structural? Sometimes it's reasonable to think more on that line. Let me explain. China has really changed how some of these industries work. Let's stick to steel. So if China has to produce steel, they have to buy iron ore at $200. But many Indian majors have their own iron ore. Effectively, if the prices remain where they are, the amount of money which Indian companies can go is still not well understood by the markets. The markets have underestimated the magnitude of the cash flows. Instead, the markets are more than willing to overestimate how the trend can change fast. What will actually happen maybe somewhere in between, we don't know. But if you have underestimated the cash flows, then you have also underestimated the upside. That is something which one should do with moderation. I'm not saying you should not do it, but do it with some balance. I'm not seeing that at the moment in the discourses on commodities. The second point, that China uses certain strategies which are more aligned with its political priorities. It doesn't want to buy coal from Australia. So India gets cheap coal from Australia. Coking coal is available cheaper for Indian steel companies. Instead, China goes and buys from a host of other companies in other countries. So effectively, the cost structure of Indian steel could not have come into a sweeter spot than it has now. We can debate whether the sweet spot will last or how long it will last and whether Indian companies can really hold on to it. But the fact is, nobody anticipated it. Even when it came before us, nobody believed this will happen. Even when the trend was firming up very clearly and quite strongly, we were only doubting. And now when the trend has really firmed up, we still want to hope that we will be right in missing this trend completely. Now, I see a lot of wishful thinking in this, and we should become more pragmatic to read the trend closer to see how it is going to last out. Interestingly, a lot of momentum investors, those who are masters of trend, are the ones who are doubting the trend. They don't want to see the evidence which the trend is throwing before them. I find this behavior really quite queer. You have missed something, but what you are taught in your learning is that if you missed it, you still hop on to play the trend as long as it lasts. But here, you're suddenly becoming value guys, or you're becoming very rational guys, and coming up and saying that, oh, this trend won't last, 10 years ago this thing happened, without understanding the economic circumstances and the geopolitics. Both are vastly different between the last cycle and now. I would think that this is a new situation, approach it on merit, understand the situation as it emerges and evolves. It could change the way you wish it to change, but what if it doesn't? If it doesn't, don't be a spectator for what is clearly a spectacular trend that is emerging. If you like this video, do share it with your equity investing friends, keen followers of stock market and students of investing. Do stay the course with us on this journey. Thank you.